Well, so we've had the trade war brewing for a couple of months, right? And I think this was sort of the verbal currency war that started in the last day or so. It's not that there's any action been taken, but it's the first verbal effort here really to talk the dollar down. And it's pretty significant. When we had something that smelled a little bit like this at Davos early in the year, Mario Draghi at the ECB got very angry about it and mentioned in the press conference. This is something that's taken very, very seriously.
How much of what is going on in the currency markets is, quote, manipulation, and how much of it is purely the market reacting to economic situations and interest rates and where they are relatively?
Well, there's certainly two important forces, right? There's the interest rates that are rising in the U.S. because the economy is quite strong. And normally when you impose tariffs, that also causes your currency to go stronger, right? So there's a little bit of a circularity here. If you look at what the other countries are doing, the European Central Bank has not intervened in the currency market essentially since 2000, so it's a long time ago. And the Chinese have had a history of manipulating their currency.
Are they doing it now?
But now it's actually the other way around. The currency is weakening.
Yes.
They're actually trying to avoid it weakening too fast by intervening in the market to...
And it is weakening because the president has put tariffs on some goods and threatened more, and that is regarded as damaging to the Chinese economy?
But
definitely a part of it.
Even the overnight move that was so dramatic,
Yeah.
you didn't see that as a signal, like, have at it, President Trump. Here's what we can do.
The PBOC doesn't look like it is defending the yuan at all by allowing the peg to slide.
I think what they're doing now is a moderate amount of smoothing. They're trying to smooth it so it doesn't collapse. Like the president used the dropping like a rock term, and it has been dropping fast, and they're trying to temper it. But it's not them intervening in the market to get it weaker, right? So that's traditionally what we understand as manipulation.
I asked Steve Bannon about this yesterday, and I want to play his response to you and see what you think.
Okay.
It's not the technology theft. It's the forced technology transfers. The third part's the ZTE, where we can basically implode these companies. The last is the
I'm trying to game this out. So
here's the game. Right now, we're converging on a point, and they understand this. We could take the whole thing down. We could take the whole thing's built on a house of sand.
What if they sell our treasuries? What if they devalue their currency?
They devalue their currency. They're just going to flood more dollars out. They got $3 trillion of reserves, and trust me, in a New York second, that thing would flood out of the country in a second. That's what their own people think about their economy.
I thought that was a poorly reasoned response, because the reason they have a walled capital account, the reason they have capital controls is precisely to avoid what Steve Bannon was talking about there. But what I drew from that, and to the degree that you believe he influences or is influenced by the White House, is he doesn't care. What if the president doesn't care? Or what if the president doesn't care about the onslaught that would happen if the Chinese continue to devalue their currency?
Yeah. Well, so the first thing I would say is that, okay, clearly China has engaged in unfair trade practices for decades. That we can all agree about. Therefore, some kind of response to China is very warranted. I think that's very different from the European Union and so forth. In terms of what the currency is doing right now, we have a fairly orderly decline. It's bigger than we would have thought a couple of months ago, but it's fairly orderly. They've done a lot over the last couple of years to make sure they don't have a panic, where they don't have this massive capital flight. It doesn't feel like 2015. I think one thing you can look at in China that's very interesting is they've allowed their own interest rates to really fall quite a lot in the last 2 months. If they were super worried about capital flight, they would not allow that to happen. So that tells this is something they are under control of to some degree. It hasn't spun out of control yet. They're not manipulating directly, but they're allowing it to move a decent amount.
What about his underlying premise? If they got rid of capital controls and people could take out money, how much would leave?
I think we saw in 2015 and 16 that this is something where we're talking about hundreds and hundreds of billions of dollars in a short period of time. So if they lifted capital control, this currency could move very, very significantly, and then obviously Trump would have a much bigger problem. Then it would be falling much faster than a rock.
Hey there, thanks for checking out CNBC on YouTube. Be sure to subscribe to stay up to date on all of the day's biggest stories. You can also click on any of the videos around me to watch the latest from CNBC. Thanks for watching.